The Financial Times has reported that the Chinese government wants to break up Alipay and force the creation of a separate loans app. They also want Alipay to hand over user scoring data into a new joint venture that would be partially state-owned and, of course, completely state-influenced. And the threat of Chinese state influence on the day-to-day credit decisions of Ant Group's lending operations was enough to send Alibaba stock tumbling 6% from its Friday, September 10th close price of $168 per share to where it was as of the recording of this video at $158 per share. I, of course, understand why investors would sell on the news of China getting more influenced in Ant Group's operations, but I question if this announcement should have been received with the stock tumbling into the $150 per share area. I'm really not convinced, and in fact, I actually see this as relatively good news, and that's what we'll dive into in this video. You're watching More Money, let's get it. What's up, guys? Welcome to the channel where the focus is on doing the best investment research possible. And if you're returning, welcome back. The Financial Times reported that the Chinese government wants to break up the Alipay app and force the creation of a separate loans app. Now, specifically, what does that mean? Well, for starters, let's start with what Alipay does. At a high level, the Alipay app allows customers to make payments, which is their core business. Using the app, customers can also take out unsecured loans, purchase insurance products, and wealth management products. Now, as covered in previous videos, the Chinese government really has a problem with technology companies acting like banks. So they've already asked Ant Group to separate out Alipay and Alipay from Ant Group Payments business into a new entity and bring in outside shareholders. For those who are not familiar, Alipay is similar to a traditional credit card, and Alipay makes small unsecured loans. Together, they comprise the lending arm of Ant Group's business model. So now the Chinese government is taking the next steps in moving this regulatory process forward by requiring two additional steps. The first step is that the lending arm of the business, which I just explained being Alipay and Alipay, are separated completely from the Alipay super app and into their own app. And secondly, the government is requiring Ant Group to turn over their user data that underpins its lending decisions to a new separate credit scoring joint venture that would be partially state-owned, according to two people briefed on the process as reported by the Financial Times. I'll link to the article in the description below. Now, I wanted to give you my thoughts on both required actions and then how I feel it impacts Alibaba as a whole. So starting with the separation of the lending arm from the payments arm, I think this is being done to reduce Alipay's stronghold of the unsecured loans market. When the regulators were looking at this, they were surprised with the sheer size of the unit. Alipay helped secure about 1/10 of China's non-mortgage consumer loans in 2020. What worries the Chinese regulators about a lender having such a large market share is the potential for predatory lending and financial risk to the overall system. And if you recall, China is not immune to risks in their financial system. So I understand the caution being taken by regulators, but as an investor in Alibaba, I don't like it. Now, moving on to the second item, which is turning over their user data. The reason for turning over the user data is once again the Chinese government's belief that a technology company's monopoly comes from possessing control of the data. So what do they plan to do here? They essentially are forcing Alipay to give up control of this asset to the previously mentioned new joint venture and retain only 35% control of the new company. The state would own the other 35%, and the remaining 30% would be owned by private partners who are allocated smaller shares. I'm going to be completely honest here. I don't like the idea that Ant Group is being allocated away to bureaucrats and other private partners, and this is what I believe is the biggest reason for the share price decline. There is a bit of a silver lining for Ant Group here. Although Ant Group has been struggling with regulators about retaining control of the new joint venture, a compromise was reached. This was that state-owned companies in Ant Group's home province, including the Zhejiang Tourism Investment Group, would hold a majority of the state's 35% stake. This is a good thing because it was reported that there is a mutual trust between Ant and Zhejiang, which implies that Ant will have a big say on how the JV operates, so that's a win for Ant Group. But in the same token, the new setup will also make sure that Ant listens to the COP when it comes to critical decision making. And of course, Ant Group's executives are rightfully worried that they will eventually lose control over the credit scoring company, which I don't disagree with. I think eventually they may just have a financial interest but no decision-making capabilities. Now, I'm not close enough to the business, nor do I have a Chinese technology banking background, so in full disclosure, there may be things here that I'm missing out on, which can prove to be a real risk to Ant Pay. And of course, before I give you what I think is the overall implication for Ant Group and Alibaba as a whole, I would have to let you know that there is one thing that the Chinese regulators can't do, which is stop you from smashing that like button. It really helps YouTube know that this channel provides valuable content, and thus they'll share with more viewers like yourselves. Well, the main intended implication is that Ant will lose its ability to independently assess their borrower's creditworthiness. So this would mean that if an Alipay customer wants to take out an unsecured loan, they would have to first log onto the Ant Group lending app, where Huibei and Jibei will be held to make the request. The request would then be routed to the new joint venture scoring company where the credit profile is held, and then the information will be sent back to Ant Group's lending app to issue the credit. Currently, the process is entirely integrated within Alipay, and Ant said that it made credit decisions within seconds. The article mentioned that a senior executive at a different online lender said that this could translate into a moderate cut in their margin, since the firm could no longer use its own data to make lending decisions. The bigger implication from my perspective is the fact that there's a very real possibility that regulators will step in with further regulations if Ant Group continues to take on more and more market share above that 10% of the non-mortgage market in China that they already have. So overall, you have to expect slower growth for Ant Group going forward. Now, I already anticipated that there was going to be unforecastable problems with the regulators stepping into Ant Group. So in my 6-part series on Alibaba, I already attributed zero growth. Let me repeat that, absolutely zero growth to Ant Group, because why not? The stock was cheap enough already without contribution from Ant Group. So this leads me into what I feel is the overall implication for Alibaba as a whole. This news to me is actually good news, not bad, because it reinforces the idea that the Chinese government is working with Ant Group to move the regulatory process along and get Ant Group back into the driver's seat to grow the business. This increases the likelihood that Ant Group's IPO could occur within the next 12 months. Now, does a watered down Ant Group with a potentially slower growth profile really impact my valuation of Alibaba? Well, if you recall from my valuation model, which I gave away for free with no paywalls attached, and I will link in the description below, I haven't given any credit to Ant Group growing their earnings in my Alibaba valuation. So getting anything from Ant Group is purely upside in my valuation. Also, recall that I'm valuing Alibaba at approximately $300 a share with that limited contribution from Ant Group. So my overall thoughts on this is that although this news wasn't what investors were hoping for, when you think of it in context to the current depressed valuation of Alibaba, this news should have taken the stock higher, not lower, because the prospects of Ant Group's IPO are now more realistic. So I actually feel that in the next coming days, the stock price will rebound off of the 150s and go back into the 160s, the 170s. Hey, we might even see the 180s. I've been doing a ton of new research on this channel, and I believe that I have found an interesting new investment that also has a big investment from a member of the Buffett family. So in order to not miss out on that video, please consider subscribing to the channel and clicking that notification bell to be notified when I upload that video. Thank you so much for watching, and I'll see you later.